It's December 5th, JLD here, and welcome to MSTR Today in the Treasury Titans. Michael Saylor is dressed to impress. He is orange all around, from the shades to his jacket to his shirt to his pants, even the car that he is driving. Let's flippin' go. And the next post from Strategy is all about being wrapped. Now, this is a little ode to Spotify's Wrapped they do every single year of the podcast that you listen to. By the way, let me know if you listen to this show on Spotify. I do have quite a few listeners on Spotify of MSTR Today. So if I made it into your Spotify Wrapped, I would love to know in the comments section. Here's Strategy Wrapped. Here we go. Oh, what is it? 203,600 Bitcoin. Wow, they've stacked 203,600 Bitcoin so far this year. Onwards and upwards for Strategy. Grain of Salt has a great post here, but before I get into it, remember, nothing in this video is financial advice, purely financial entertainment all around here, because Grain of Salt says everything changed this week for Strategy with the $1.4 billion cash buffer. Saylor and Fong made the ultimate pivot, not to prove conviction, but to directly address capital markets uneasiness around volatility and tail risk. Cash buffer equals tail risk killer. A possible jump from 1.44 billion to 2.5 billion slashes insolvency probability and tightens every credit metric across the stack. 2 to 3 years of liquidity in the is the inflection zone. At 2.5 billion plus, the Bitcoin risk collapses, the Bitcoin ratings rise, the prefs and debt get repriced like hybrid high-grade credits, which is a little side note, by the way, why I've been saying that I expect maybe a couple more green dots coming up in the next few weeks if the price of Bitcoin allows Strategy to continue to ATM a little bit there. $650,000 in Bitcoin makes the buffer self-sustaining. At 100,000 Bitcoin, less than 2% annual stock dilution, 1 MNAV, less higher MNAV, can fund the yearly pref yield without touching a single Bitcoin or cash buffer. Spread compression accelerates before it flattens. Biggest gains occur between 1 to 2.5 billion. Diminishing returns show up beyond 5 billion as default probability approaches 0. No reason to go that high unless they sell a lot of prefs next year. S&P uplift hinges on volatility survival, not coupons. Once the structure can withstand a 70% Bitcoin drawdown without stress, ratings shift from speculative towards synthetic IG. The whole system goes reflexive, lower tail risk, tighter spreads, lower cost of capital, stronger liquidity, even lower tail risk, a loop only a handful of people understand. And it all comes from Strategy's building of the world's first digital credit vehicle. And this looks more like a time machine than a vehicle. So here we go. And again, both Grain and myself think this 1.4 billion is going to be increased, probably to the 2.5 to $3 billion range, and then sit there for the foreseeable future. We'll see. Saylor knows the math better than us. Zink says the CEO of BlackRock, Larry Fink, has just confirmed to us what we already knew. Nation states are buying. Most of Bitcoin selling this year has come from individuals. Meanwhile, the big players are stacking. That is the signal. Let's give a listen.
We're seeing more and more legitimate long-only investors investing in it. There was an article about a foundation, endowment just bought a lot of IBIT. But I can tell you there are a number of sovereign funds that are standing by. They're adding incrementally at 120, at 100. I know they bought more in the 80s. Right. That's fine. And they're establishing a longer position. And you own it over years. This is not a trade. You own.
Exciting stuff to hear that from Larry Fink. Adam says, breaking news for Bitcoin. The U.S. Commodity Future Trading Commission has officially authorized listed spot cryptocurrency trading on the CFTC registered futures index exchanges. This is the first time in American history that spot crypto markets will operate inside a fully federal regulatory framework. The U.S. has effectively opened the gates for mainstream, compliant, institutional-grade Bitcoin trading. A regulatory green light of this scale is something the markets have waited over a decade to see. Regulatory ambiguity has been the number one obstacle preventing trillions of dollars of institutional capital from entering Bitcoin. The CFTC's move provides the clear, federally supervised structure that large financial institutions require for pensions, insurers, asset managers, and banks. Bitcoin just evolved from interesting to allocate. Bitcoin now gains the kind of regulatory positioning that gold and oil enjoy in the U.S. commodity system. This aligns with Washington's stated goal to make the U.S. the global leader in digital asset markets. Nothing can stop this train. The entire world is capitulating. Get on board or gets left behind. And then here is the actual post about that in detail. Mark says MSCR BTC per share was negatively impacted due to the formation of the 1.44 billion cash reserve. However, the reserve positions the company to recapture that dilution through accelerated preferred issuance going forward, which is highly accretive to Bitcoin per share. So you can see right here, dropped 1.4% when they added that $1.44 billion to the actual reserves. But as Mark is explaining, as I went on a little rant yesterday all about, is that this 1.44 billion, what this signals to institutions is that we can and will be paying these prefs for at least 21 months. Of course, we have the buffer to do that if everything goes all to heck in a handbag. But of course, for much longer, because they also have $60 billion of Bitcoin behind that as well. And so now institutions can comfortably allocate to this at a much higher level. The market sentiment towards the prefs should be shifting because of this buffer. Again, as I said yesterday, Michael Saylor in a perfect world would have allocated that 1.44 billion to Bitcoin, but he knows the market, the institutions, the sentiment that Tradfi must be appeased on some level. The rating agencies must be appeased on some level. So it was kind of something he had to do, and it does make the company stronger as a result. The Bitcoin therapist says bullish reversal incoming for MSTR, something that statistically only occurs once every 5 to 20 years for a stock, and it's incredibly reliable. The abandoned baby candlestick pattern is a super rare 3-candle pattern on a chart that screams strong trend reversal coming. It looks like this. 1, a big candle going with the trend, example, a long red one in a downtrend. 2, price gaps the opposite way and forms a tiny baby candle that doesn't touch the first candle at all. 3, price gaps again and a strong candle closes deep into the first candle's body. This perfect sequence almost never happens in stocks, only once every 3 to 10 years per stock, or roughly 0.02 to 0.08% of all trading days. It's 10 to 50 times rarer than the common patterns like doji or shooting stars. Because it's so scarce and requires 2 clean gaps plus exact positioning, when traders actually see a real one, they trust it heavily. Studies in big quant firms show it's one of the most reliable reversal signals available. In simple terms, the market's version of a unicorn. Spotting a genuine abandoned baby is like getting a loud, trustworthy heads up that the price direction is about to flip hard. And this is a hat tip to Matthew Siegel. So what does this look like? Big red candle, the abandoned, bullish abandoned baby, the stop loss, entry level, and then it just keeps going up. So here's our little abandoned baby. I wonder who bought down there. Who bought down there? Who bought our abandoned babies? Let's go. Anthony said, Bitcoin's compound annual growth rate over the last decade is 72%. Just think about that for a second. 72%. Vivek Ramaswamy, he works with Strive. He sends out a warning letter to MSCI over his proposal to shun Bitcoin treasuries from indexes. So now MSCI is people are letting MSCI know, Michael Saylor, Vivek Ramaswamy, and many others, that MSCI cannot pull off this corrupt and incompetent maneuver without massive exposure, without massive pushback from people who know what they're doing is both corrupt and incompetent. So it's in the spotlight. It'll continue to be in the spotlight. No, I'm not going to pay $59 for your Forbes membership, but life is good. The Bitcoin therapist says short squeeze is going to be biblical. And again, something that we've been waiting for all year. And when will it come? Will it come? Only time will tell. 100% Strategy says, Saylor has said this before. What's there to debate about? Nothing. Peter Schiff isn't 100% in gold. Saylor is 100% in Bitcoin and now $1.4 billion in cash. I'm 100% in MSTR. Should we debate people with weak or no conviction? Well, it's pretty funny because our man CZ did. And I will tell you, it was an interesting conversation, but they were basically more talking past each other than to each other. So I wouldn't necessarily call it a debate, but here's a little glimpse.
I definitely appreciate and thank you for hosting this event and bringing me out here. And at least you had the courage. I mean, I've been, trying to get Michael Saylor to debate me for years, and he's afraid. But no, you've got no problem.
I can arrange that for later tonight.
Try. Is he still in town?
He is.
Okay. Well, I will tell you, it was more entertainment than anything else when CZ and Peter Schiff got on the stage because let's be honest, Peter Schiff, I mean, he's doing this for clicks. He's doing it for engagement. He's had a great year with gold. He's had a great year with silver. We've got to give him that for sure. And just like CZ said a couple times, CZ, he's not against gold. He's not against silver. He's just for Bitcoin. And that's why he just wants other people to understand what exactly that means. So I have a great clip from Michael Saylor coming right up. So sit back, relax, and enjoy. When you're ready to build your complete business identity, you want to do it fast and right. With Northwest Registered Agent, you can build your business identity in just 10 clicks in 10 minutes. When you want more, start your business with Northwest. Everything you need to launch and protect your business all in one place. Your business identity isn't just your logo or website, it's everything that represents you, from what customers see to what they don't: legal filings, state licenses, secure domains, and compliance tools. Northwest gives you more privacy, more tools, and more guidance so you can focus on growing your dream. For nearly 30 years, Northwest has helped entrepreneurs like us build confidently. You can form your business for just $39 plus state fees, backed by real corporate guides, people who know your state's laws and have your back every step of the way. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks in 10 minutes. Visit www.northwestregisteredagent.com/paidJLD and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/paidJLD. Michael Saylor just made an $835 million bet buying the Bitcoin dip. Right now, Bitcoin's fallen almost 40% off its October high, and the big money is buying the dip. What's your strategy? Now might be a great time to convert your IRA or 401k to Bitcoin with the help of Bit IRA. Plus, you can fund it with pre-tax funds, then continue to invest it over time as you do any other retirement accounts. Bit IRA protects your assets with end-to-end insurance, highly secure storage, multi-encryption, and registered with the U.S. government. Your IRA is fully IRS compliant. Best of all, you can trade crypto within your retirement account without incurring taxes on any buys or sells. Just go to bitira.com/JLD and request a free info guide. Once you do that and open your IRA, you'll get a free ledger. Bitcoin has proven time and time again to rebound, every cycle going from a higher low to a higher high. With Strategy's latest purchase, Michael Saylor clearly believes Bitcoin is at a discount. Time for you to get in too. Go to bitira.com/JLD to open a tax-sheltered IRA in Bitcoin.
Schwab is going to custody Bitcoin and extend credit against crypto assets early next year. Citi is doing the same thing. It used to be, I couldn't get a loan against Bitcoin from any major bank. And now, if I counted the top 10 banks in the United States, eight of them are actually engaged in crypto lending. And they've all flipped their stance in the last 6 months. So this is a major change. Wall Street's embraced Bitcoin as collateral, as capital. We were the first company that was publicly traded with a substantial holding of any crypto asset, and the first company with Bitcoin on the balance sheet. Then there were a dozen, and then there were 2 dozen, and then there were 60. And now there's a lot more than that. When we started doing it, there were no ETFs. And you can see that the first ETF was approved January of 2024. There's 85 worldwide. And of course, the most successful ETF in the history of the world is BlackRock's IBIT ETF. So you can see that Bitcoin has exploded through all of the fund business. It has exploded and been embraced through hundreds of publicly traded companies. I mean, to think we've gone from just a handful to more than 200 in 12 months, it's just an extraordinary move. Bitcoin is the economic foundation, the ethical foundation, and the technical foundation of this entire market. if you consider why, it's because it has the most power. It has the most electrical power, 24 gigawatts. That's 24 full-on nuclear reactors. That's more energy than drives the US Navy. It has more computer power, more than 1,000 exahash. That's more power than all the data centers that Microsoft and Google could muster together. It's got more trading power. There are 1,000 exchanges. Anybody can trade this anywhere in the world. Anybody can custody this anywhere in the world. Anybody can transfer this asset anywhere in the world. It's got more political power, right? We've got hundreds of millions of crypto enthusiasts. We've got hundreds of millions of Bitcoin holders. 30% of the registered voters in the United States are pro-crypto. It's got more economic power. More than $1 trillion has been invested in this network. $1 trillion of real capital. My company has spent something like $48 billion to acquire 3.1%. And so if you basically take 3.1% to a 48 billion and you scale that out, you see how much real money is flowing into this network.
What's the second best? There is no second best.